welcome. This is Tchaikovsky. We're going to go through over here some cost, volume, profit questions. This is to give my students additional practice prior to taking their exam. Just a few different things. These questions are copyrighted by myself. These are questions I've written for my class. Hopefully you find them useful. Any opinions contained herein in this video are those of myself and not my employers or any affiliated organizations, including but not limited to Irvine Valley College in the South Orange County Community College District, an amazing place to attend community college. So you get guys like me who can put you to sleep through videos, but I can also teach live lecture, so it's all good. So coming over here, these are additional practice questions relating to cost, volume, profit. When we're looking at cost, volume, profit, we're really now trying to look at costs and trying to come up with break even. And the one thing I can tell you in terms of where I've seen students make the most amount of mistakes is I provide these different ratios for students, but when I kind of throw in some like different parts of it, it ends up making it more difficult for the students to go through and to solve the questions. So the way we want to go through and approach these different questions are to kind of go through and to essentially prepare variable costing income statements. And what exactly do we mean by that? Well, a variable costing income statement is we're basically kind of saying, how much are we going to need to sell to cover our fixed costs? So over here, we're going to have our sales less our variable costs. This is going to give us our contribution margin. And then less our fixed costs. This is going to give us our net income well, let's call it right now net income. So let's take a look at our first scenario. And we also want to kind of go through and do over here is we kind of want to also add in some different parts. We're going to have units per unit and then total. The way that I personally like to kind of go through and to approach these various different questions is to put in the values that I know that are given to me and then try to go through and see if I can figure out the rest of the different parts. So over here, my per unit, YYZ sells inventory for $1,000 per unit. And over here, my variable costs are $600 per unit. And when we look at this over here, my fixed costs are $4 million. Okay, so the first part of this question is using the values above, prepare a variable costing income statement showing sales at break even. What does break even mean? That my net income is zero. And if we look at the relationship between these different accounts, our sales less our variable costs gives us our contribution margin. Less our fixed costs gives us our net income. So right over here, we're just kind of saying sales less our variable cost gives us our contribution margin, or what are we basically in terms of selling these units? What are we going through and contributing to the covering of our fixed costs? So if my net income is zero, to the contribution margin I'm going to be seeking is going to be the same amount as my fixed costs, or over here at 4 million. Now that I know what my contribution margin is, I can look at some of the other relationships that are contained in this question. If I have $1,000 sales price per unit minus my variable costs per unit, what this is going to go through and give me is right over here is my contribution margin per unit is going to be $400. Remember, my number of units times the per unit is going to give me my total. And by the way, these are different. These are caps. These are lowercase. There you go. Okay. So if the number of units times the per unit equals my total, then that must mean that I must have sold, well, what times 400 equals 4 million? Well, if I isolate X by dividing both sides, or dividing both sides by 400, then what I'm going to get over here is that the number of units I'm going through and selling must have been 10,000. What I want you to do when you do these questions, this is extremely important. Make sure you check to make sure that the math works. 10,000 times 400 equals 4 million. Trust me on this. You want to go through and always do this. Now, another thing you're also going to see over here is that if I had a contribution margin for 10,000 units, that must mean I sold 10,000 units and I must have had variable costs for 10,000 units. So that must mean that my total sales must have been 10 million. My total variable cost must have been 6 million. So my contribution margin is 4 million. My net income is therefore 0, right? So this seems very simplistic, but it's really important that you kind of understand where all these numbers are coming from. Okay, let's go through and look at scenario or question 2. So question 2 is going to introduce something to us that's going to be a little bit different. And what I mean by that is we're going to kind of take a little bit of the same scenario, right? So we know that from that previous scenario, we had over here sales of 1,000 per unit, variable cost of $600, and we have fixed costs of 4 million. But now what I'm introducing is, well, I want to achieve an after-tax profit. Very important is after tax. So what I'm going to be doing here is adding in some new information. And this is mainly going to be is my sales minus my variable costs gives me my contribution margin. Minus my fixed costs is going to give me my net income or income taxes. That's in net income before income taxes. Then I'm going to have less income taxes is going to give me my net income after tax. And again, this is something I can tell you that has perplexed many of my students for a very long period of time. I promise that if you follow this formatting, it's going to make a lot more sense. I know from this over here, so again, sales were $1,000 per unit, variable costs are 600 per unit, my fixed costs are 4 million. But now I'm desiring an after-tax profit of $400,000. Okay. Okay, so my net income after tax is 400,000. Now, there are going to be relationships with this. If I have a net income after tax for my desired after-tax profit of 400,000, well, what exactly does this mean? Well, it means that if I call my net income before income taxes X, and I call my income taxes or the income taxes is going to be 20% of that amount. And oftentimes you can call this 1x. It's basically the same thing. So if I look at the relationship over here, meaning x minus 0.2x equals 400,000. Another way of writing this is 0.8x equals 400,000. X is going to be equal to 400,000 divided by 0.8. When I take 400,000 divided by 0.8, I get $500,000. So when I look at this over here, right, very important to do this. If I take 20% of $500,000, I get $100,000. Why is this so important to do? Because whenever I compute these values, I have to make sure it works. 500,000 is my net income before income taxes, minus my income taxes is going to give me my net income after tax. Coming up over here, so what does that mean? Well, if my fixed costs were 4 million and I need to sell more to reach this 500,000, that must mean my contribution margin must have been 4.5 million. Because 4.5 million, right? Remember the relationships over here. My sales minus my variable costs equals my contribution margin minus my fixed costs is going to give me my net income before income taxes. So this net income before income taxes times 20% gives me my income taxes. And then my net income after tax is going to be over here at 400,000. So my contribution margin must have been 4.5 million, excuse me. 4.5 million minus 400,000 gives me net income before income taxes of 500,000 minus 20% gives me net income after tax of 400,000. So now what I'm ready to go through and do is to look at the relationships again. My sales minus my variable costs per unit is going to give me my contribution margin per unit. What this means is that if I say, well, Y times 400 equals 4.5 million, that must mean that Y is equal to 4.5 million divided by 400, or that means I must have sold 11,250 units. Coming over here, if I have a contribution margin for 11,250 units, that means I must have sold 11,250 units. I have variable costs for 11,250 units. So coming over here, this is how I'm going to go through, check my work, and it works out. You can go through and figure out, like if I say, well, how many units need to be sold to achieve that after-tax profit? There's ways you can go through and do that using the ratios. However, you are going to have to back into the net income before income taxes because I'm only going to give you the after-tax number. But if you use this methodology in terms of going through and solving these problems, it's going to be a lot easier for you. Let's go to the very last part of this question right over here. And we're just going to kind of copy our work down because we can do it. And let's go through and clear this out one more time. And let's see over here what this new question has in store for us. So using scenario A, assume that the sales price per unit increases by 10%. Well, what does that mean? Well, we were selling it for $1 million, for $1,000 per unit. If the $1,000 per unit, my sales price is 1,000 per unit, right? If it's increasing by 10%, I can say, well, 1,000 times 10% is 100. It's the increase. So my new sales price per unit is going to be $1,100. Alternatively, I could have just said, well, 1,000 per unit times 1.1 is going to give me 1,100. So that is the per unit amount that is going to be my new sales price. So again, I'm taking this scenario A and I'm putting in the new information. So variable costs decrease by 15%. Let's go ahead and take a look at that one. So if my variable costs in the base scenario were $600 per unit, so variable costs are going to be over here at 600 per unit. And they are decreasing by 15%. Well, 15% of 600 is going to be 90. So my new variable costs are going to be 510. Now, alternatively, what I could have done, so this is the decrease in dollars of 90. What I could have done is I could have just said, well, 600 times 0.85, if it's a decrease of 15%, it means it's 85% of that number, and I get 510. So you can do it either way. So my variable costs here were 510. It means my contribution margin will be 590. Okay, so this is the new information I've been given, and I'm just basically kind of going through and following through with this. So I've got a new sales, new variable cost means my contribution margin per unit must have been 590. Now it also tells me that my fixed costs increased by 251,000. That means it went from 4 million to 4,251,000. So this is 4 million old plus 251,000 new. So right over there, that's how I'm getting the 4,251,000. Over here, it's telling me that I have an after-tax profit desired of $800,000. So what we're going to now go through and do is that same relationship. We're going to say X is the net income before income taxes. The tax rate is 20% of that amount. That must equal 800,000. So if I have X minus 0.2X equals 800,000, this is the same as 0.8X equals 800,000. X is going to be equal to 800,000 divided by 0.8. So if I take this, I'm going to get $1 million. I need to make sure this works. 20% of $1 million is $200,000. So right over here, my net income after tax makes sense. It's $800,000. So looking at the relationships right over here, net income before income taxes minus my taxes equals this part here. What is my contribution minus my fixed costs will give me $1 million? Well, this is going to be 5,251,000, or y minus 4,251,000 equals $1 million. I basically add 4,251,000 to both sides. I believe you can figure that out. So coming over here, I must have gone through and sold 8,900 units. If I have a contribution margin for 8,900 units, must have had sales and variable costs over here for 8,900. Very important. I need to make sure that this goes through and works. So over here, 9,790,000 less 4,539,000 is equal to 5,251,000. Again, for these types of questions, if you're taking my class and if you're doing any class, these ratios can be helpful, right? But I think students tend to kind of go through too much and rely on these as opposed to just going through and putting the information into like an algebraic formula I call the matrix, although this is really a true mathematical matrix, but I think you know what I mean. So in any event, hopefully you enjoyed this additional practice for cost, volume, profit, and I'll be returning shortly with another cost, volume, profit question for you to go through and practice with. Make sure to like and subscribe, and I'll see you on the next video. Great day.